Hello, everybody. So, I don't even know what to say. I promised I'd come back on here after Groupon reported, whether it was good or bad. And here I am. And then I have the added pleasure of talking about Magnitude blowing up. I have gone 0 for 3 in my 3 biggest positions, all in the last 6 weeks, 2 weeks. Really depends on when you want to start counting from. It's been a complete debacle. Bigger picture, my portfolio is down 35% since June, but it's still up 60 something percent for the year. I don't know how that's possible, but it's true. I just looked. And that's me valuing the CVR at 0. So my portfolio still has assets, even though it looks like I've lost all of them. And I've de-risked the portfolio because everything's blown up. So I'm going to talk about all 3 of those names and what I think is going to happen in the near and medium term. And then I'm probably going to take a decent break from YouTube. I'm taking a break from Twitter for at least a few weeks to try to get my mental health back, because this has been, I have been doing this now since professionally, I've been doing this my whole life, but on my own, I've been managing my own portfolio since 2008. And I've had probably 8 drawdowns of greater than 25%. Maybe even 10. It happens almost every year, given how concentrated I am. I can't recall ever having a drawdown like this. It's perplexing in 2 ways. The first one is that the market is at all-time highs. And the second one is the second one is that all 3 of the names that I made so huge have really nothing to do with each other. You can't say that Magnachip and Groupon and IMVT went down because, value's out of flavor or something. They all went down for very company-specific reasons. So it's pretty remarkable to get all 3 of them wrong. Considering I was just telling people the other day, or someone the other day, that all I really needed was one of the 3 to go right, given how much leverage I had with call spreads in IMVT and in Groupon. If just one of the 2 went right, I would have made a lot of money. So on the positive side, Groupon was so big that in after hours yesterday, it was over a 90% delta adjusted position. And I tweeted this, so you can, it's fact. I sold all my common in after hours yesterday and was just left with my call spreads, which are huge, by the way, which at the time I think was I was a 60% delta adjusted position in after hours after I sold all the common out. I had so many August 40 and 45 calls and September 40 calls that it made sense for me to sell the common because the stock was trading at 41, 42 in after hours. And I had so much leverage with the August and September and October calls. Today, with the stock at 32, pretty much all of my call spreads are worthless in August, September, October, and even December. So there's no more money to be lost there. And my entire position, which is still big, I think it's a 30% delta adjusted position now. I haven't sold anything. I'm just telling you what it's done based on it going down so much. It's all call spreads. So it's a 30% delta adjusted position now with almost all of my capital in Jan 22 calls that's left. And those are, deep in the money. They're 20 strike and 25 strike calls with a 30, 35, and 45, offsetting that I put on last summer. And that's my positioning in Groupon. So let's talk about Groupon and what's happening today. And, part of the reason why I sold the stock yesterday in after hours. I had a feeling that the market was not going to like the July number. They said that they were, my initial intent before the stock blew up this morning was I was going to go through line by line on the press release and tell you why I think numbers are moving in the right direction. And I do think they were moving in the right direction. And I think that they probably still are. After this conference call, which I thought was a complete debacle, I pretty much heard very little, if anything, that I liked on the conference call. I'm going to step away and I'm just going to talk more bigger picture than I am actually going through the quarter, because the bottom line is that with July being down from as significantly as it is from April, April was 71% of 2019 and July is 61% of 2019. There's reasons to believe that is not a permanent problem. Dog. Oh. Come on. What they said in the call about not having supply rings true in San Diego. I mean, there hasn't been a concert in San Diego in the month of July. None of the venues have opened up yet. They are all opening up in August, and then in September and mostly in October, they're packed. So whether it's the amphitheater is packed in September and October, or it's the local indoor venues. And if there's literally no concerts, then they can't sell excess inventory. Live Nation is one of their partners. So, that all rings true to me. And I just thought that the way that they handled the conference call with regards to how people should expect a recovery and when the recovery should happen, it sure doesn't seem like they had any idea when the recovery is going to happen. And that's fair, but when you're dealing with a business that has been in decline for years and Wall Street has no idea if the COVID bump is just a small blip in that decline, people aren't going to have a lot of patience. It's hard to say what would change the perception. I have a view which is very contrary to what's happening with the stock right now, but the situation today going into quarter three is very different than the situation in quarter two, because right now people are expecting a quarter three debacle, right? They know what July is. The company basically said, I guess August will be probably even worse than July, and because of Delta and for whatever. So numbers are going to get slashed. And the setup here, in my mind, would be that October, maybe even September, but October should hopefully be not only a Delta-free United States. I'm convinced that'll be the case, that there'll be no COVID in October. There won't be a new variant that comes, that would come in the winter if it's going to come. And Delta should burn out in the next 4 to 6 weeks is my guess. But you should hopefully have the supply constraints relieved in the things to do category. And October should put up a great month. If October puts up a great month, then when they report in November, if they put up a, mid-high 70s, let's say, percent of 2019 in October, the stock might double, overnight. Because then they'll look out into November and December and 2022, and your story's back intact, right? I mean, they're still going to do this year. It's really hard to take. So they did 40 million EBITDA this quarter. 10 million of it is fake because it was just due to the voucher. So that's 30 million. It means that my original thesis, which is that you have a core kind of 30 million a quarter EBITDA base, even during the heart of COVID, is still there. And goods has been decimated. There basically is no goods business anymore. It's less than 10% of gross profit. It's probably like more like 5% of gross profit going forward. So it doesn't even exist. So there's basically, that won't cloud the picture. And at $32, you're looking at like a $700 million market cap enterprise value. Basically the net debt and the net cash, they kind of wash themselves out. There might even be a little bit of net debt if you really want to axe out all the liabilities. But I just consider it just a wash. They'll do better than what they're saying they're going to do this year in EBITDA. So, they won't, they'll still beat in quarter 3, and they'll beat in quarter 4 much more than what they've guided to. And even if they ramp the marketing, we know that they can do that because we saw what they did in quarter 4 last year and quarter 1 of this year in the heart of, of COVID. And their verticals in health and beauty are doing fine. So let's say they end this year and they put up 130 million of EBITDA versus or 140 million of EBITDA total versus the guidance of 115 to 125. There's 50 million of CapEx, and there is 30 million of stock-based comp. So 80 million comes out. If you really want to be a true value investor, 130 minus 80 leaves you with 50 million of pre-tax cash flow on a 700 million market cap, and that's kind of like a trough number. That is not expensive, especially for something that is a going concern. If it can be a going concern, it's an online marketing company. If you look out to next year, this is, again, the company just botched this, but they don't, it's not all their fault, but the messaging is just terrible. So per my request, I asked them multiple times, and they did it. They took out the slide about if they get to 80% of 2022 gross profit, if they get to 80% 2019 gross profit next year, they'll do 250 million in EBITDA. And if they get to 90%, they do 300 million. I thought that slide was ridiculous. Everybody thinks of it as guidance when it was just illustrative of what they could do based on their cost structure. They finally removed it. The idiots on the sell side still thought it was guidance. They're now thinking they pulled the guidance. So you'll finally see sell side take down the way too high 2022 numbers. And one guy on the sell side has them doing $6 in earnings next year and has a hold on the stock. $6 in earnings to hold the stock. He has them doing 1.2 billion, I think it is, in sales, even with the new revenue recognition. And that would be like higher than 2019 sales. Has a hold in the stock. So he doesn't even know how to model the company. But in reality, all the tailwinds that are happening this year, especially in things to do, all the headwinds, will be huge tailwinds next year. Live Nation, I think, said that they're expecting double-digit percentages more concerts next year than they did in 2019. So you're set up into quarter 3, quarter 4 in 2022 would be that they make some traction on their new business plan and they do 130 this year. They guide to, let's say, 150 to 175 next year. They're not going to guide to 250. They never were going to guide to 250, but they guide up for 2022. Hopefully the street takes down their numbers enough to where, the guide is consistent with where the street's at. I would assume they're going to ratchet their numbers down big time after today. And, it's a cheap stock. It would be 5 times next year's EBITDA at a 175 EBITDA level and growing. The stock would double. The stock would triple, actually, if they showed growth next year. They show user growth and they show consistent quarter over quarter growth when it comes to the core business. You'll just see a CSET change where it just immediately it's like a step function. It's almost like what happened in February when the stock went from 35 to 62. I didn't really understand why it did that. I mean, in that quarter, they had an okay quarter four. They said that January and February were awful, and they guided like 100 million in EBITDA, and people could not believe they were going to do 100 million in EBITDA this year, and the stock, almost doubled. So that's what I think about the core business and what I think what I think will happen. I think that the company's strategy from the interim CEO, the way they answered that question about why he's still interim, it's all incredibly bizarre to me. He had no good answer. I mean, he really should have just said that the board is still conducting a comprehensive search, and when we have something to say about, permanent CEO, we will let the market know. That's what he should have said. He didn't even say the board's conducting a search, I don't think. I was just so kind of stunned throughout the whole conference call that I have to reread the transcript. But I still strongly believe the company is sold. In fact, after, today's debacle, I would think that they maybe even, double down on those efforts. It's very hard for anybody to value this thing today because you have no idea what it looks like on the other side of COVID. You don't know whether the business model is going to gain traction. You don't know whether or not there is a business model here. You don't know whether or not Groupon will be able to transition from being a deep discount locals marketplace to something where people can go back to and repeat purchase. So I don't know, a private equity firm would be the only one that could take the risk. And I don't know, they would have already done it. And I don't know whether or not the board, wants to do it at these valuation levels. I just have no idea. I don't know what they're thinking. It's an orphan stock. There's only 4 real sell-siders that follow it now. They all have holds and sales on it. The one buy guy left his firm. At this point, I'm just in wait and see mode. If it went down to the mid 20s, I would probably significantly step up my position, either back in common or more spreads. Given how big the drawdown was, and I was going to get to this later on in the YouTube, but I'm taking a break from market for the first time in years. So I'm not putting on any new positions. I'm not selling down the 3 core positions because they've already gone down so much. They've been sold down, and I'll get to, Magnachip and Immunovent in a second. The other 2 big positions I own, Blackstone Mineral, BSM, and AMPY, I'm not selling. And I'm not selling the ARB, the Macquarie Infrastructure, which I pitched you guys, MIC. I keep saying, I'm sorry. I'm just really out of it right now. I know it sounds crazy, but the be greedy when other people are fearful. That instinct is hitting me with Groupon right now. Again, no inclination. You're leaving? Hold on, I'll be back. My wife's going away for the weekend to a wedding, so I told her to come in and say goodbye when she's leaving. Anyway, what I was saying was be greedy when everyone else is fearful. It strikes me now as this is the time to be greedy on Groupon. I just don't know if it's done yet. I don't see any reason to buy the stock on that conference call, which is just a host of excuses, whether it's having supply issues in the supply chain, whether or not they don't know whether or not the new app and the new rollout is, transitioning well from a click-through rate or from a, what do you call it, a conversion rate. Nothing but why the CEO's interim. I mean, nothing they said is going to make somebody say, I need to own this stock now. So from that perspective, again, my inclination has not been to buy anything today. And I haven't. And I won't. So do I think I will in the future, in the next couple months? I mean, remember, most of my exposure has been decimated. I have no comment anymore. And all of my call spreads, August, September, October, December are worth, virtually worthless. So from that perspective, I can reload at some point. Most likely what I'll do, my guess is I'll wait until the end of this month, early September, and put on November, December call spreads is my guess, but who knows? Let's see what happens. Let me go back here. All right, now that I see, I pulled this back up here. Let's take some questions on Groupon, and then I'll go to MagnaChip, and I'll go to IMVT. You're a funny guy, Matt. Enjoy your time off. It always helps. If you ever in Belgium, let's have lunch. Thank you, Sky. I appreciate it. Fat Eddie here. Any catalyst for next earnings call? That's a good question. So that's a really, really good question. So part of the reason why Groupon went down so much in the last 6 weeks is that these market data firms have credit card data and all this kind of stuff, and they correctly anticipated July being worse than April. I think even June was not incredibly great. Obviously, April was the best month, it seems, at 71%. So I thought about this yesterday, and if September and October, but really October, start showing an increase, a market increase in business, the credit card firms, these all data firms are all going to get wind of it, and you'll see the stock go up and maybe go up a lot. So you won't need to have to wait until earnings in November. The stock will get ahead of it before it happens. Now, I'm not saying it will happen, but that would be your catalyst between now and earnings. And it's a real catalyst. And also COVID too, of course. When Delta recedes, you'll see it bounce, I guess. But it would be those two things. And at what price will you start at? Well, I kind of answered that. For me, it's not so much about what price it's at. It's about timing it from a market perspective, right? I think the stock's cheap at 31. I think the stock's cheap at 41. So if it goes to 21, I obviously think it's cheap, right? And there's no reason to buy it today, given that the momentum in the near term is all going to be negative. The month of August is going to be crap. People will want to get Delta behind them before they even consider touching it, probably. And September won't look much better, I would guess, until maybe we start exiting September. And yeah, your hope would be is that October is really good. And I think October could be really good. But, it's a complete debacle. There's no other way to say it. I thought that based on April's numbers and based on the open table data and based on mobility data, that June and May would be better than April. And I was just wrong. That they never broke out in the past the difference of the verticals, right? Where they tell you about how much of it's things to do, how much of it is beauty, et cetera, et cetera. And they now finally told you on this call that things to do is their biggest vertical in 2019. Well, it's really good to know about that now, guys, right? And yeah, I mean, it makes logical sense to me that the things to do vertical is shit right now. So I don't know, the greedy person in me wants to see it go down, even though I still have a 30% delta adjusted position. Because the position is, like I said, virtually all January deep in the money calls. And I think that will be completely fine come January. You won't need them to report Q4 for that to for this stock to work. You really just need COVID not to come back in the winter or come back strong in the winter. And then you need, like I said, the credit card data showing that they're performing. And if those two things happen, then, you know, the stock works. And it also could be sold. You know, that could happen at any time. Why is this guy still interim? Nobody could answer this for me. I mean, the board has a responsibility to have a leader in place. And it's been 18 months. And if they have run a process, which I'm sure they have, and they can't find a good candidate, then they should make this guy permanent. You can't have a business that's in this much flux without a permanent leader. They don't even have to pay him more money. He already has a huge option grant and he's getting paid really well. It's not like it's going to cost the company more to make him permanent. And none of it makes any sense, right? And, you know, my only explanation I have is the same explanation I've had for the last year, which is that the company is going through a very complex process and they don't make him permanent because they're always just kind of close to completing this process. You know, that kind of blew up in itself when they did the convertible note in April, because they wouldn't have done that if they were, you know, going to complete a process. But, you know, we're March. We're far away from March now. It's August. So I don't have a good answer, but the story is not written on Groupon. I can assure you that. There's a core base of profitability there. If you look back through the last 4 quarters of units sold locally, they've made traction every quarter locally. And it's going to be a setback this quarter. This quarter is going to be, you know, probably down over the previous quarter. And that's going to have people wonder whether or not the COVID bump happened and now it's back to secularly declining Groupon. On the positive side, if they show, like I said, in October and then in Q4 that they return to growth on a quarter-over-quarter basis, it'll prove it wrong. But they have to put that out. Then you have to show it in the October numbers. And October is a long way from now. So, you know, and there are a lot of concerts, like I said, and things like that going on in October. And there should be no COVID in October. So I added you on Twitter, but need you to accept. I'll continue to be fat and Eddie. Yeah, I'm not taking any new followers, and I'm also taking a break from Twitter. So sorry, I'm not going to be able to approve you. I know just optics, but seems bizarre to announce earnings after close, then do earnings call after market opens next day. Is that their typical MO? Yeah, a lot of companies do that. I don't really get that either, but a lot of companies do that. The earnings call the next day and during market hours. All right, let's talk about Magnachip. So good old Magnachip. Magnachip reported earnings yesterday. I was concerned that they had not put out a press release highlighting that they were going to put out earnings. They did that in Q1, and this time they just decided not to do it. And my concern was that the numbers are bad, potentially, or they were doing another deal, and that's why they didn't do it. And it ended up being that the numbers were bad. I know next to nothing about the semiconductor business and about Magnachip's business. I've said this before on here. I do know people that do know about the business, and it strikes me at face value that their excuse for why they missed is valid. There is, of course, tremendous supply problems in the semiconductor business right now, in the whole industry, and I'm not all that concerned about the earnings. This is not a case of Samsung pulling business in the middle of the quarter, and that's why they missed earnings. They would have had to disclose that, and also the way the business works is it would be future business that Samsung would pull, not historical business. And they haven't even the article that came out a few weeks ago is that they were considering changing suppliers. So that's not the reason why they missed. The stock is absurdly cheap. I mean, it's absurdly cheap. It's if you think they have $8.50 in or $9 in cash after a breakup fee, it's $10 stock, and it'll do upwards of $1.50 in earnings next year. $1 to $1.50 in earnings next year. And there was like a dozen bidders for the company. Who knows if any of them can actually acquire the company? Maybe they can't. There is a real business there that is sought after, and the company is in a huge bind right now, and they are highly motivated and incentivized to create value here. The CEO he owns a lot of stock, and he has a lot of options, and it's his only real job he's had in the last 10 years. And he's not super wealthy at least from his public holdings. And I don't know how that plays out. I do think that the Wise Road deal is blocked. Obviously it's $19. It's a $29 deal, but crazier things have happened. CFI US can come back in September and they can announce mitigation tactics and let the deal go through. I think that's extraordinarily unlikely. Obviously, again, the stock is a $29 deal. I think that the company is working hard at trying to come up with an alternative deal. I don't know if that's harder now because of this shitty quarter, but if it truly is just on the supply side, then they could obviously show that through due diligence. And I still believe we could wake up, any day to an alternative deal. I think shareholders would take 26, 27 from a South Korean consortium. Wise Road would be thrilled to save on the breakup fee, and we'd all go our happy merry way. So Magnachip's by far my biggest position now, given Groupon blowing up, and I'm not doing anything there. I feel really good about the position, and that's my view on Magnachip. So I consider this a temporary mark, and we'll see what happens in the next 2 months. I mean, that September CFI US date is a big deal because if they block it, that's the end of the Wise Road transaction. There's, they're not going to, they can't appeal it as far as I understand it. So that's good news, as opposed to this dragging out for 6 months and, lawsuits and stuff like that. That'll be it. Then the company can either return capital, which I would expect, or they can work on an alternative transaction, which I think they're working on an alternative transaction now, is my guess. To remind you, the CTFN article back in June said they'd become aware of alternative transactions if the Chinese deals can't go through. So take that for what it is. With regarding to, and any questions on Magnachip? No questions. You can ask questions at the end, whatever. And then with regard, with IMVT, the more I've thought about, so I haven't bought any stock there, but I did buy a ton of call spreads when it was 7. And I bought January 10 strike calls and call spreads. Basically, I rolled down my call spreads. I used to own January 12s, 12 by 17s, 12 by 20s, whatever. And I put on a huge amount of January 10s. Effectively, I have 10 by 15s now and 10 by 17.5s on. And I don't know, I think I have like 150 basis points exposure in call spreads there. And I still have a 11%, it's now 11% position. given that it's gone up and my portfolio's gone down. The more I thought about it over the last couple of days, the more bullish I got on what's ultimately going to happen there. And I have not seen a situation like this ever, really, right? So I have never seen a situation where a majority shareholder, someone that owns, let's say, more than 25% of the company, bought a huge stake from the company in a money-losing company at a premium to the previous market price. And then the next day, you, Mr. Retail, or me, Mr. Retail, can buy it at a 40% discount to what they paid from the company. So no matter how you view Roivant, even under the most cynical lens, it's hard not to be bullish on what ultimately happens with Immunovant. So I did a whole YouTube on this a few days ago, and you should definitely watch it if you're interested. But in short, if the purpose of the original 13D was to prop the stock up to get the SPAC deal done, then there is no reason why they would have done this deal and done it now. They would have waited till the SPAC deal was closed, and then they would have announced what the next steps are for their Immunovant position. And if they wanted to do an infusion of capital instead of buying it all out, they would have done it then, right? They were pretty well aware, I would think, that the stock was not going to react well to them not purchasing the minority out and them infusing capital at a premium. If they were caught off guard, if they did think that this was going to go up on that news and not down, then they're in a situation now that provides them an unbelievable opportunity, right? When Roivant goes public, assuming it does go public in the next 6 to 8 weeks, they can now go to the board of Immunovant and offer a 50% premium to what is now truly the unaffected price. And they can acquire Immunovant somewhere between $11.75 and $15. And they would not have paid $11.75 for $200 million of stock if they thought that they were ever going to be able to pay less than $11.75 for the company. That $200 million they infused, they'll just get back when they consolidate the whole company into Roivant. Right now, there's $600 million of cash. It's burning cash, and the market cap is like $850 million or something like that for a small enterprise value. The only catalysts in Immunovant coming up are them restarting the trials, which I think there's a high degree of confidence they will, or else Roivant wouldn't have put $200 million into it. And that's it. The trials won't read out for years, or at least until 2023, any of them. So, the stock will languish and maybe get a small bump when they restart the trials, but Roivant has the opportunity to consolidate this into their larger company, and they won't have that opportunity in 2 years once the trials read out. Roivant would not have put $200 million of fresh money into this company if they thought this was a zero. They're way too smart to throw that kind of money after bad money. And it does nothing to accomplish your SPAC deal because you just blew the stock up anyway. Dan on Twitter had an hypothesis that the reason why they did this now was that the SEC would not declare their registration statement effective for the SPAC while this was outstanding, because it's very convoluted. The idea that they said they were going to go public, and then once they go public, they're going to make a bid to acquire another public company, and then also not tell you any of the valuation metrics that they're going to do it at. And the SEC is cracking down on SPACs. And that, to me, is the only plausible explanation for why they did this now and they didn't wait until after the SPAC deal closes to do this. Because they would have had much more optionality. They could have saw where Roivant was trading. They could have decided if it was worth using Roivant stock as currency. And notably, in the 13D they filed and in the press release, they gave us no background about why they arrived at this conclusion. They just said, we're going to put some capital in, and at the present time, we're no longer going to acquire Immunovant. If you look at another transaction that happened a couple of years ago, which you could see on Sheep of Wall Street's Twitter feed, I can't remember the name of the company, but the same exact thing happened. A company went public that had a majority stake in another public company, similar size as everything. It was like whatever, a $5 billion new company that went public. And they said they wanted to acquire the minority out of the other public company. And they negotiated with the board, and the board and them failed to come to an agreement. They put out a press release and they detailed all of the negotiations. They said we offered 1.2 shares, then we bumped it to 1.4 shares, and we couldn't agree, and we no longer are going to merge, and that's that. Well, guess what? A year later, 12 months later, they acquired the minority. They took it out at a higher ratio than they were going to do it a year earlier. And the difference in this case is we got none of that. We didn't get any color on the reasons why Immunovant was not acquired by Roivant. And of course, they couldn't acquire them yet because they haven't gone public. They don't have enough cash to buy out the company with cash. I mean, Roivant has like $2 billion, but they're not going to spend $700 or $800 million on acquiring this minority stake. They wanted to use stock. They told us this in the original 13D. But they gave us nothing. They gave us no color about why this fell through. Instead, they put $200 million in, which is just below the 20% threshold for shareholder vote requirement to issue new stock. It's like 17%. They issued 17% new shares, and they didn't need the money. Immunovant has $400 million of cash, enough to get them through the end of next year, if not farther. Yet they took this $200 million of capital. Roivant didn't do this as a favor to minority shareholders. If Roivant wanted to buy more Immunovant in the, and not acquire the company, they could have let the stock blow up. They could have done they could have announced that they're doing a rights offering. I mean, honestly, this is what the press release would say. It would say, look, we love the company. We want to make sure it's really well funded. That's why we've agreed to backstop up to $200 million, a rights offering, in the coming weeks. Stock blows up. They priced the rights offering at $6. It's fully subscribed. Roivant puts up $120 million pro rata for what they own. Minority shareholders put up $80 million. And that's that. Roivant puts up less money. Immunovant gets its $200 million. Roivant does not increase its ownership stake at all, has the same stake as it did yesterday. And that's that. They decided they didn't want to own the whole thing. They didn't want to put on more risk. But to put up $200 million at a premium at $11.75, when it's now trading at $7.50, $7.65, for people that are sharks, they don't look so sharky, right? They look like they just got taken. And I have never seen ever a situation where a majority shareholder infuses primary capital in a company at a premium, and then the stock goes down 40%. It did that because everyone that owned this thing was an ARB. Biotech investors won't touch this. So the ARBs all punted, and you get what happened. I think the stock continues to rebound. I actually think it gets back to $9 to $10. And I think that they acquire it in the next 6 months, not in the next month or two. But I think that I think Roivant goes public. And I think Roivant jumps at the opportunity to acquire it. I think the minority board members, or I should say the independent board members, not the minority board members, the independent board members are probably hearing loud and clear from shareholders that they want to take whatever deal's on the table. And they could probably pay. I mean, they can't pay. If they pay $11.75 now, they might get away with it. But I don't think that it's going to be $7.75 in 2 or 3 months. I think the stock will be 9 to 10, and they'll take it out at 13 to 15. And in the previous example I gave you, that where it took a year and then they eventually took it out, it was a 50% premium to unaffected. Is what that precedent was, 5-0. And other precedents have been in the 60 to 70 to 80% premium. So I guess you win either way here. If the stock goes back to 9 to 10, you make a lot of money from 7.75. You could sell, or if it doesn't, then Roivant's going to jump and they're going to take this thing out. Is how I view it. And yeah, I like it a lot. You can't get blown up clinically because there's no trials currently being run. You could definitely get blown up if the FDA says you can't run your trials. But again, I don't see how that's possible if Roivant just put $200 million in. At this point, after so many months of working on the issue since February, they would have a pretty good sign if the FDA was going to tell them that there's no path forward for this drug. It's a cholesterol issue. It's not killing people. And the FDA is probably just going to make them monitor the cholesterol. Would you buy here? IMVT? Yeah. I think it's. If there wasn't a margin issue with me, I would add here. 11% position is pretty big though, right? But if there wasn't a margin, if it was marginable, I would add here. The only thing is that I got so much exposure with the January 10 calls that I'm really set up well, assuming this gets taken out by the third week of January. I just need an announcement by the third week of January. And it makes more sense than not for Roivant to act within 3 months of going public. Because again, you want to pounce on the stock being low. If the stock goes up, then you lose your opportunity. So what are the odds Roivant goes public? I have no idea. I think high. I think you'll have a lot of the SPAC redeem. They have a pipe that is they have a pipe that is already signed. Hold on one second. Hold on one second. And the pipe's good for 210 million, I think. So let's say 75% of the SPAC redeems, they'll raise 310 million. They don't really need the money. And if they don't go forward with this transaction, I don't know what the path is for them to go public. And I guess they can IPO next year. If you assume that Roivant does want to buy out the minority in Immunovant, then they need to be public to do it. So I think that they would, that'll be a good sign, right? If they agree to go public and take the SPAC public, even if a ton redeem, it's a sign that they really wanted the currency. And by the way, that solves another problem for them. If Roivant has a ton of the SPAC redeem, then the float is going to be very small. But Immunovant has its own float, right? And if Roivant buys them with stock, then all of a sudden it has a decent sized trading float because all of the Immunovant public shareholders become Roivant public shareholders. So you accomplish something there too. And it just makes all too much sense, honestly, for them to have a final step here. And like I said, if you read the 13D and you look at the press release, it's missing a lot. It's what they're not telling you. And yeah, I mean, it's one of these, it reminds me a lot of DVMT. I was involved in DVMT back in a few years ago. It was one of my biggest winners. And it's like just a huge game of, how can they fuck you? But with DVMT, the argument was that there was so much money to be made by Michael Dell and Silver Lake that, and then the DVMT minority holders had so much money to be made by a takeout that they could bridge it in the middle. Now, the difference here, of course, is you have to believe that this drug has a future to think there's so much money to be made here for Roivant. They wouldn't have put $200 million in if they didn't think so. I don't think they would have put that initial 13D out saying they wanted to acquire the minority if they didn't think so. I mean, I look back at the chart the week before they did that 13D, and it basically went from 20 to 13 in those 5 trading days. And I'm sure that 13D was in preparation, not the day they did it. So they clearly think this stock is significantly undervalued. And they already own 63.5% of it now. So it's not a huge burden for them to take out the rest of the minority. And yeah, I'd expect them to do it. I just don't know when. So the options are risky from the perspective that you might have them expire worthless. And then, yeah, the stock's probably dead money, except that, it went up 10% the last few days. And I think it can get back to 9, not the 9 to 10 range would be my guess. Remember, they paid $11.75. So anything below $11.75, you're buying into the company, at a market discount to the savvy insider that knows everything. Unless you think that they just did this for appearances, they didn't have to put up $200 million. They could have put in $50 million, right? A token amount of money. But they put in $200 million, which is just under the amount they legally can put in before you need a shareholder vote. So I think there's a lot to be said about being able to buy the stock at $7.80 when they paid $11.75. That's just my view. Would you buy here if it was for MX? Yeah, I mean, my philosophy is always that if I own it now, then I'd be buyers of it now, right? There's no tax reasons why I own MX. And it's very liquid. I could sell it today, and it's my biggest position. Now, mind you, I mean, there's a ton of hair on MX now. You have no idea what Samsung might do if this deal doesn't go through. We have no idea if the deal is going to go through. It's probably not going to. And then we have no idea what the company is going to do with its cash or what its go-forward business plan is. So, good luck, but it's my biggest position. Kid Dynamite. What did I miss? Oh my God. Just when I thought the day couldn't get any worse, this fucking guy shows up. Anything else? It's been an hour. Any other questions? So in conclusion, this has been a total disaster. It happens. I'll live to fight another day. And I'll see you guys in the coming weeks and months, I'll be back. I'm just going to take a break. Go public via reverse merger with IMVT if SPAC fails. Yeah, Brent. I mean, if they did that, they would accomplish everything because they would have the float of IMVT as their new float. And it would be a pretty easy way to go public. I just don't know. I don't know how the independent committee, I don't know what they value Roivant at and what they value, IMVT at. It's very hard for them to come up with that analysis. So to give you an example, so let's say they're taking out IMVT at $15 a share, and they're using Roivant's valuation at the SPAC deal at, I can't remember, but like 4 billion, I think, enterprise value. The market might think that Roivant's only worth 2 billion, and IMVT might not even go up. So that would be a disappointing outcome in the short term because, no one really wants or knows what Roivant is worth. And that's the challenge there. Does IMVT pop when you value it based on a private company that's very hard to value? I think it's vastly more likely the SPAC deal goes through and they raise the 300 million at this valuation. They have the currency. They'll see where the stock trades for 4 to 5, 6 weeks. Remember, you have to see where the stock trades too, right? You can't buy IMVT till you see where this thing goes. I mean, Roivant might go to $6, $7, $8 after it goes public versus the 10 the SPAC's trading at now. And they might decide that the currency is too valuable to buy out the minority of IMVT. So, there's definitely risks when it comes to what the next step is here. But that doesn't mean that IMVT is not undervalued and that Roivant doesn't think it's not undervalued. They just have to figure out a way to consolidate the entity. And I'm confident they will. I just don't know whether it'll be in the next 6 months, the next year, or whatever. Thanks, everybody. You're great. These are really learning from you. I'm also next time with teams, but not weeks hurts to learn special sits. Yeah, you guys are all really, you guys have all been really good. The camaraderie is great. It's amazing how, with the internet being so toxic, I haven't had one person come on here and troll me in this whole time, the last 6 weeks. Even when BMYRT failed, I didn't have anybody come on and troll me. So it shows that, I guess, in some scenarios, you can have a humanity function properly and people can act human. I put myself out here, right? I don't get paid for any of this. I do it, for myself, for my process, and because I enjoy interacting with people, right? This is kind of my office. Twitter was my office. This is a little bit of my office, whatever. And I get joy out of this. I don't get as much joy when nothing works, right? When everything fails, it isn't fun. And, but part of the way, part of the reasons why I can take victory laps when things go well is because of my transparency. And it's the same reason why I have to own up when things don't go well, because it's the same transparency. And I get to ride the good with the bad that way. It's only fair. So, the last chapter has not been written on any of these stocks. Like I said, I'm still up huge from the beginning of the year. And one of the joys of everything blowing up is that they're less likely to go down a lot more from here, right? I mean, magnet chip to me seems, you really would need, for this not to work going forward, you would need Samsung to pull a substantial amount of their business. And even then, I think my buddy came up with over $1 in earnings if they did that. So, they will figure out a path there. And with Groupon, like I said, the greedy person in me wants it to go lower. If it goes lower, there'll be a great setup there again. And there's going to be a great setup there, in the coming months, whether it's here or it's lower. It's just more about timing. And with Immunovant, we'll wait and see what happens with Roivant. If Roivant doesn't go public, then yeah, it wouldn't make the Immunovant story dead. They could definitely do a reverse merger into Immunovant. Maybe they would announce that the same day. The day the SPAC deal fails is the day they announce that they've negotiated, a deal with Immunovent. I don't know. I don't think so. I think the SPAC deal is going to go through, is my guess. Less likely to go down much further. Famous last words. Yeah, I know. I mean, look, I've lost, you have to understand, since June 1st, I have made money 3 trading days. And I'm pretty sure all 3 of those days, I didn't make back what I lost the previous day. So it has been just an unbelievable bad run for me. And, it's all the 3 stocks, right? It's Magnachip. Magnachip's gone straight down from 24 to 19. Groupon's gone from, 47 to now 31. And Immunovant went from 1050 to 750. It's crazy. I'm only down 35% because I was levered. Groupon was as much as a 90%, 80%, 90% delta adjusted position. Magnachip was a 50, 60% delta adjusted position. And Immunovant was like a 22 or 20% delta adjusted position. So with that kind of leverage and to have those stocks go down so much, like I said, 35% drawdown is surprising. It's only that bad. And since I look at everything after tax, that 35% drawdown is like, 17% after tax. It's not the end of the world. I'll be all right. What do you think will happen with the CVR lawsuit? Do you think they settle? I think I talked about that in my last YouTube. I do think they settle, but I think it's going to be years from now. You would need at least two years from today. You need to go through discovery and all that stuff. And I do think that they settle. It's very unlikely that they go to trial. And I think the settlement range would be anywhere from, $1 on the low end, but that would be like 5 years from now, 4 years from now. But it's much more likely for the settlement range to be in the $2.50 to $5 range in 2 to 3 years, 18 months to 3 years kind of thing. Brutal. Happy managed to get out of the Groupon stock and after hours. That was great timing. I sold for 2 reasons. First, because I had so many of those August 40 and 45 calls and September 45 calls, I was so levered to it going up that I couldn't sell the options in the aftermarket because the options don't trade. That's what I would have probably done, is sold the calls and kept the stock. I'm lucky that the options don't trade because instead I sold all this common and I'm left with the calls. And I never in a million years thought the stock was going to go down to 31.50. But as a result, I had all the leverage in the calls and they got wiped out, but I had fixed losses. So it was probably one of the better decisions I've made all year, was selling. And it's hard to sell. It's hard to sell stock, but I did it and I tweeted it. So it's there in the history books, I just I was not comfortable with the July number, and I knew that August was going to be worse. And it was hard for me, for the market, to see through that. And then now with the conference call, they talk about the supply issues they have. Nobody knows whether or not they'll ever get back to normal, or what normal will be. So sorry, I got a phone call and I got distracted. All right. This kind of feels like therapy. I don't even know if I even want to hang up. My wife just left for the airport. My nanny's here to take care of the other 2 kids. My daughter's at camp. I feel like I should just start putting some sad music in the background, like Sarah McLachlan or something. That one with the dog commercial to adopt the pets. Oh no, that's, I think, to feed the hungry kids in Africa. Or is it both? Maybe she does both. Anything else? Going once, going twice. All right. And I do want to say I'm sorry for all the losses. You know, I'm not an investment advisor. I don't get paid for this. Nothing is investment advice. But that doesn't make me less. That does I feel an incredible weight on my shoulders when I put my ideas out there. And I know some people follow them, whether they follow them blindly or they follow them because they do their own research. Of course, you should never follow somebody blindly. It sucks. Losses suck. And, you know, I've been doing this for like 15 years on my own, whatever it is, 13 years. I have a very good track record. Even on Twitter, I mean, even on YouTube, I've had some huge winners. I mean, Groupon, I started buying at 17. And, you know, I've had some huge winners just from Dell was a huge winner. Tiffany was a huge winner. I think Magnachip will end up being great. I think Groupon will still be great. IMVT, it's very unlikely we'll ever make back our money from, you know, people that bought it 15, 16, 17, whatever. But that's how this business works. That's how this game works. So you're going to have losers. Definitely never going to bat 1,000. All right, everybody take care. Have a great weekend. I'll see you on the other side.